This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rebounded by more than 1% on Tuesday, pairing previous sessions' losses, on supply concerns amid an escalating Middle East conflict. Stronger U.S. services sector data and a cut in production at Libya's Sharara oil field. Brent crude futures gained 97 cents, or 1.27%, to $77.27 a barrel by 0354 GMT, while U.S. West Texas Intermediate crude futures climbed $1.14, or 1.56%, to $74.08. Oil's slide was limited by mounting concerns that Iran, a key Middle Eastern producer, may retaliate against Israel and the U.S. for the assassination of a Hamas leader in Tehran and an Israeli attack that killed a Hezbollah commander in Lebanon, potentially leading to a wider regional war.
Asia's beleaguered oil refiners have received welcome relief on two fronts as crude prices slide and top supplier Saudi Arabia offered some relief. Saudi Aramco, the kingdom's state-controlled producer and the world's largest oil exporter, raised its official selling prices for September, loading cargoes for Asian customers by less than expected. The benchmark Arab light grade saw an increase of 20 cents a barrel to a premium of $2 barrel above the Oman-Dubai average, Aramco said in a statement on Monday.
Moving on to the top news in the energy sector.
A string of dramatic revisions to official U.S. oil consumption data have unnerved market participants who rely on the figures to trade. Traders and analysts watch weekly and monthly supply and demand data from the U.S. Department of Energy's statistical arm, which, given the U.S. is the top producer and consumer of crude and fuel, can influence decisions affecting billions of dollars of energy flows. The releases also inform everything from policy decisions in Washington to how much OPEC Plus members will produce. The statistical arm of the Department of Energy, the U.S. Energy Information Administration, published a monthly update last week that showed U.S. oil consumption at a seasonal record in May as motorists burnt more gasoline than even before the pandemic.
Venezuela's oil exports fell in July as crude processing units were hit by outages, reducing stocks available from the country's main producing region and increasing delays to load cargoes, according to documents and vessel monitoring data. The OPEC countries' exports had recovered in previous months, helped by U.S. licenses and authorizations to partners of state oil company PDVSA, but domestic operational issues knocked down the volume of crude and fuel shipped to the second lowest monthly level this year. A total of 38 cargoes departed from Venezuela's waters last month, carrying an average of 585,600 barrels per day of crude and fuel, and 266,000 metric tons of oil byproducts and petrochemicals, the documents and data from LSEG showed. Next, we have the top news in metal markets. Prices of most industrial metals dropped on Tuesday, weighed down by bleak demand outlook following U.S. data that sparked fears of a possible recession in the world's biggest economy. 3-month copper on the London Metal Exchange was down 0.3% at $8,858.50 per metric ton, as of 0303 GMT. The contract was hovering near a 4-1/2-month low of $8,714 hit in the previous session. The most traded September copper contract on the Shanghai Futures Exchange declined 2.5% to 71,260 yuan, $9,964.90, a ton. The contract tumbled as much as 3.3% earlier in the session to 70,630 yuan, its lowest since March 13.
Iron ore futures prices drifted lower on Tuesday, as wider losses induced production cuts among steelmakers in top consumer China and lingering high portside inventories weighed on sentiment. The most traded January iron ore contract on China's Dalian Commodity Exchange bucked the recent uptrend to slide 0.97% to 766 yuan and 50 fen, $107.18, a metric ton, as of 0243 GMT after climbing nearly 2% on Monday. The benchmark September iron ore on the Singapore exchange was 0.64% lower at $103.15 a ton.
We will now look at the top news in the agricultural sector.
Weekly condition ratings for the U.S. corn crop fell in the past week, in line with analysts' estimates, but soybean ratings improved, U.S. government data showed on Monday. The U.S. Department of Agriculture rated 68% of the soybean crop in good to excellent condition in its weekly crop progress report, up from 67% last week, while 14 analysts surveyed by Reuters on average had expected a drop of 1 percentage point. Most of the Midwest soybean crop sets pods during August, making this month critical for determining yields.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.